At 32 years old, Daniel was a millionaire. Luxury apartment, 2 cars, crypto portfolio exploding, stock trades winning almost every week. On social media, he looked unstoppable. By 36, he was completely broke. Not struggling, not downsized, broke. And here's the part that makes this story uncomfortable. Daniel wasn't stupid. He was disciplined. He read books. He understood markets. He tracked trends. So what happened? Daniel mastered the art of getting rich, but he never learned the art of staying rich. And those are two completely different games. When Daniel first started investing, he was cautious. He saved aggressively. He studied companies. He diversified. Then the market entered a strong bull run. Tech stocks doubled. Crypto tripled. Options trades paid fast. Every decision he made seemed brilliant. Friends started asking him for advice. Family called him the smart one. His confidence grew. But slowly, something changed. At first, it was subtle. He increased his position sizes. He used more leverage. He stopped holding cash. He told himself, "I understand this now." What he didn't realize was this. He wasn't just benefiting from skill. He was benefiting from timing, from momentum, from a rising market that was lifting almost everyone. But success has a dangerous side effect. It convinces you that you are in control. And when you overestimate control, you underestimate risk. Daniel began concentrating his investments. Why diversify if you know which asset will win? Why keep emergency reserves if money is growing every month? He optimized for speed, for growth, for bigger returns. He never optimized for survival. Then the shift came. Not a dramatic crash at first, just volatility. A few red weeks, negative headlines, fear creeping into the market. Daniel didn't panic immediately. He believed he was smarter than the downturn. He doubled down, bought more on margin, took even bigger positions. But the market didn't bounce back quickly. Losses grew. Margin calls arrived. Positions were forced closed. Within months, years of gains disappeared. And what hurt more than losing money was losing identity. Because Daniel didn't just see himself as wealthy, he saw himself as intelligent, as ahead of the crowd. Now he had to face something harder than loss. He had to face that he might have been lucky. This is the lesson most people miss. Getting rich requires optimism. Staying rich requires humility. Getting rich often demands risk. Staying rich demands restraint. Daniel eventually rebuilt his finances. But this time, he did things differently. He diversified again. He kept cash reserves. He stopped chasing explosive growth. He accepted that he could be wrong. And that acceptance changed everything. Because the real secret to staying wealthy isn't predicting the future. It's avoiding ruin. It's making sure one bad decision cannot wipe you out. It's understanding that compounding only works if you survive long enough for it to compound. Most people focus on maximizing returns. Very few focus on minimizing destruction. But wealth isn't about how high you can climb. It's about how well you can avoid falling. There's another trap that destroys people after they make money. Lifestyle inflation. When Daniel first became wealthy, his expenses quietly grew. Better apartment, better car, better vacations. Nothing extreme, just upgrades. But when income dropped, expenses didn't drop with it. And that pressure forced bad decisions. The truth is simple. Income makes you feel rich. Savings and discipline make you stay rich. The market will always change. Opportunities will always fluctuate. But psychology remains constant. Ego says, "You're smarter now." Greed says, "You deserve more." Fear says, "Make it back quickly." Wealth whispers something quieter. Protect what you've built. The difference between getting rich and staying rich is emotional control. It's the ability to say, "This is enough risk." It's the strength to leave room for error. It's choosing longevity over excitement. Daniel learned that making money feels thrilling. Keeping money feels boring. But boring sustains. Boring compounds. Boring survives. And survival wins. Now let me ask you something honestly. If your income doubled tomorrow, would your lifestyle double too? Or would your security increase? Would you take bigger risks or build a stronger foundation? Think carefully, because the goal isn't just to get rich. The goal is to stay rich long enough for wealth to change your life. If this story made you reflect, comment below. Would you protect your wealth or chase more? In the next episode, we're going to talk about one powerful word that separates sustainable wealth from endless risk. That word is enough. And understanding it might protect your financial future more than any investment ever could. I'll see you there.